This is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott, here with co-host Andrew Young. The last couple of weeks, Andrew and I went through our predictions for 2023, and we've got a lot of positive feedback from both episodes, in particular Andrew's episode, where he described this opportunity around protocol revenue, that basically not blockchains may be frictionless, peer-to-peer networks for doing transactions lightning fast, but they're not free. There are costs associated with using these networks, and a lot of applications as well have a revenue model. And Andrew's thesis was look for projects where the protocol revenue exceeds the new issuance. Where basically, earnings exceeds dilution. And as a result, in the long term, that should be accretive to the token holders of that specific project. And it's worth mentioning, frankly, that the SX Network, Andrew's project, fits that bill quite neatly. But this week, the discussion is around a much bigger project, which is Ethereum. There's been a meme going around that Ethereum has become so-called ultrasound money. And I think a lot of people are wondering what exactly that means, because anybody who knows a little bit about the network knows that recently they made a move from proof of work to proof of stake. And as a result, the new issuance of Ethereum declined, but there's still new Ether getting minted in order to compensate people and entities that are staking their tokens to the network. But what's happened recently is that the net new issuance of Ether has basically declined almost to zero. So we're going to describe the dynamics of that and how that works in more detail later on the episode. But first, Andrew, the past week has been a very eventful one for the markets. Bitcoin has gone from, I think, 16,500 to start the year to over 21,000 at the time of recording. Even in the last week, we've seen it move about 10, 15%. A lot of names are participating in this, Ethereum notably, but Bitcoin seems to be leading the charge. The Bitcoin dominance recently surpassed 40% for the first time in almost a year, which is a sign of Bitcoin's sort of growing relevance, even though if in the long run it's kind of declined relative to the rest of the market. What do you make of this recent pump? Is this something short-term, or are we at the start of maybe a more sustained rally?
Yeah, it actually fits in really well with what we talked about in both of our prediction shows, in the sense that what I would call quality crypto assets are outperforming. And you're seeing that with both Bitcoin and Ether being the sort of the top two. Like in the top 10, those are actually the 1 and number 2 top 10 assets over the last week by performance, with Polygon sort of trailing right behind, which I think is like another very high quality project. And you're seeing that also with NFTs as well, particularly high quality NFTs, which is a little bit surprising to me. And so it's almost like a barbell. You're seeing the highest quality assets outperform, and then maybe like some of the most speculative assets, which is what I would call like NFTs, also sort of outperform. And then that middle layer, the large middle, is doing okay, but is not showing the same sort of outperformance. And that's why you see Bitcoin dominance rising, as well as sort of Ethereum sort of outperforming as well. So it's definitely I would call it like a barbell market right now.
Yeah, so that's the dynamics today, and I agree with you. And Ethereum being one of the 2 big ones participating is interesting. In past rallies, usually Bitcoin is the singular leader to start these things off, and then Ethereum follows along. I think this thesis around, the fact that ultrasound money is happening right around this time, I think is helping to put some wind in the sails of Ethereum, and is helping even to challenge the narrative around Bitcoin. What do you think is driving this market rally? What are the factors here that have put us up, 25, 30% to start the year?
I think it's definitely macro related to a certain extent. So I would say there's sort of two broad things. First is just the overall macro environment has been better. Obviously, you've seen high beta technology stocks and just the overall stock market do relatively well over the last week as well. And that was sort of coming off the inflation print, which came in on expectations. We're now looking, I mean, inflation just keeps decelerating. We're now at like, I think roughly 6.5%.
Yeah.
And month over month, it's been negative now 6 months in a row, or roughly negative. And so if we have another couple of prints of that, just because of the higher and higher base from last year, the headline inflation rate is going to keep falling to potentially all the way down to like 3% within by April. So that's obviously given a bid just to global risk on assets. And then finally, I think crypto's been outperforming because one, it's higher beta, obviously, but then two is, I mean, crypto has just been getting hammered nonstop for 6 months. And to a large extent, we were getting hit even when the sort of traditional stock market wasn't. And so I think it's just one of those things where we're just way oversold. And so we're getting just any good news is setting things up. And also big things like Solana have been ripping mostly on short squeeze, on like what looks like mostly a short squeeze. So it does seem to be, yeah, I would just say it's those two things: macro environment coming back, and just oversold crypto assets. Like, what do you think? Do you agree with me, or do you think there's anything else that's potentially driving it?
Well, I think it was a laggard in the early rally that we saw in some other risk assets like equities. So yeah, it could be a bit of catch up. I'm going to run the correlations and put it in our weekly note just to see how it actually has performed the last few days, because stocks have done well, but crypto is like way outperformed. And it almost feels like on days when the market has no direction, and I mean the broader market, crypto is rallying a lot higher. So I'm wondering if we're seeing a breakdown. That would be a really interesting signal, which rather than Bitcoin is participating in a dovish turn for markets, which is what I think equities are doing with the inflation prints coming in lower than expected. Rather than that, if there was some kind of asymmetrical or asynchronous sort of rally happening where it was going to happen on its own, independent, and you would see that pop up in some of these correlation numbers, that would be extremely bullish, because the critique, I think, of crypto has been that it's benefited from zero interest rate policy environment, ZIRP as it's called, and well, how will it perform in a rising or higher rate environment? To see it rallying irrespective of the broader market, to me would be like a massively bullish signal. So we'll see about that. There's lots of rumors also about, oh well, maybe it's some exit pump from some exchange that's trying to look more solvent than it is. That I think there's a lot of cynicism and uncertainty in the market, and a lot of people, believing that any rally is a sucker's rally and this is a bear trap, and that we're due for another leg down. It's impossible to time these kinds of things. Honestly, I don't really know where it's going to end up or if we're going to retest. But it's starting to feel, it's like a Lindy effect. Like every day the rally lasts, the more real it is, right? The more likely it'll continue to go on, right? It's not like a flash in the pan. So we'll see.
Yeah.
And I think that, if stocks go, by the way, like if the NASDAQ is up 15 or 20% in the first quarter of this year, crypto is probably going to end up higher, because it's just going to, the rising tide will lift all boats, right?
Yeah, I don't know. I color me someone who's more in the bear camp, I think, short term. I still think it's going to be, not that I don't think crypto is just overall undervalued right now. I do think I guess my base case is still sort of a lot of choppiness over the next kind of 6 to 12 months.
Yeah.
And then as we get into more of the Bitcoin halving and all that type of stuff, and just also obviously interest rates coming down, which a lot of people sort of expect to start happening in 2024.
Yeah.
I just don't see. And there's a lot of fears. I've seen a lot of fears about like a potential comeback of inflation. I mean, it's not hard to imagine something wrong going in the Middle East, like particularly Iran. It looks like a bit of a powder keg. That could be very inflationary in terms of its impact on oil prices, which then obviously sends us right back to where we were before. But I would say cautious optimism is probably how I would describe it right now, coupled with long-term huge optimism.
Yeah. Short-term, cautious optimism, medium-term, slightly bearish, long-term, hugely optimistic.
hyper bullish. Yeah.
Hyper turbo bullish. Well, we're going to be able to trade soon on GTX. trade claims, defunct exchanges and other entities that have blown up in crypto. That's a reference to the founders of Three Arrows Capital, who less than 6 months ago filed for bankruptcy, and as I understand it, are being hounded by LPs, creditors, regulators, and so forth. Have somehow have the confidence to go to market to raise $25 million to launch a new entity. Like, Lord, please give me the confidence of those guys to just like go out and do something given the circumstances. So let's move on to this big narrative that's driving interest in Ethereum as well as Bitcoin, but Ethereum obviously this week, which is Ethereum going ultrasound. So maybe just by way of background for folks, as I described in the introduction, basically all these blockchains are issuing new tokens, and sometimes they're issuing tokens at such an alarmingly fast clip that it's almost impossible for the tokens to kind of retain any value or go up in the long run. And a lot of DeFi projects will offer really like attractive token rewards early on to drive customer acquisition in order to grow assets, but it's hard to sustain unless they have a differentiated product or brand. And as a result, their token will typically decline in value if the only thing that they're offering are high yields. Ethereum is different. It's yield, so to speak, for staking assets to help secure the network is a lot lower, about 4%, I think, or 5%. And that's a reasonable rate of return to tie up assets that maybe you could otherwise be using in some other productive endeavor. Though Ethereum has the benefit of being an asset that can't appreciate, whereas if you lend someone cash, generally it depreciates in value because of inflation. But this is a yield in effect that is paid, or interest that is in effect paid to stakers. But what's interesting is that since the merge happened last fall, as well as the introduction of an upgrade called EIP 1559 or 1559, that a portion of the network's excess revenue is actually going towards burning tokens, which is to say taking them out of circulation. So all of this is really only possible because people actually want to use the Ethereum network. There are all sorts of transactions happening on the network in various different kinds of applications, and there are transaction fees associated with that. And a portion of those fees go towards new issuance, which is paid out to stakers, and another portion of it goes towards a security budget, which helps to keep the security of the network. But there's an excess amount, which if there's no allocation to those two areas, ends up going towards basically like a burn address, like it effectively takes them out of circulation. Now, all of this language, EIP 1559, burn address, blah, 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 all sounds kind of complicated. But basically, like if you're coming at this from a traditional finance background, it's quite similar, in my view, to a share buyback plan, which a company like Apple makes tens and tens and tens of billions of dollars every single year in sales. Now, a portion of that goes to paying suppliers and operations and marketing and so forth, and the rest remains as profit. Some of that profit is paid out in a modest dividend. A large amount of that profit is retained as cash on their balance sheet, but a very significant portion of that cash goes towards share buybacks, which is basically a way of returning cash to shareholders. If you've got $10 of earnings and you had 10 million shares, and now you have 5 million shares, then you've got more earnings per share, right? Even if your earnings didn't increase. And that's like the basic math of how share buybacks work. They also have the added benefit of not being taxable at source the way a dividend might be. So if you receive that cash as dividend, then it's going to get taxed first before you're able to maybe reinvest it or go spend it somewhere else. So it's an efficient way to return cash to shareholders. I frankly I can't help it. Maybe it's my bias as someone who comes from a traditional finance background, but I look at the burn function of the Ethereum network, basically taking ETH out of circulation while keeping earnings flat or increasing, as very reminiscent of how a lot of well-run businesses buy back shares in order to drive earnings per share, right? And this idea of accretive sort of value capture is really key to this next, layer or era of growth in crypto, this flight to quality as you described it. So that's my take on what's going on, Andrew. I don't know, what's your view on this?
Yeah, I think we're actually fully in agreement there on the importance of sort of protocol revenue, protocol earnings, and then also earnings quality, which you can sort of measure by the network effects and things like that. I should say the moats of the network. I think long-term, that's going to be the most important thing. At the end of the day, crypto is pretty interesting because it's highly reflexive. So what I mean by that is, particularly for blockchains, the token is used to secure the network. And so it's actually fundamental to the security of the network, which is therefore fundamental to the product that consumers are accessing. Yep. That there is like a sustainable sort of tokenomics built into the platform, because you don't want to build on something that's not sustainable. Eventually, it will collapse. And so they're very tightly, sort of neatly built in together. You know what I mean? This isn't just something for token investors to get rich. This is actually fundamental to the security of the network, and therefore the product and the user experience to the user. So it's super important. And so what's interesting too, I just want to highlight Token Terminal again, tokenterminal.com. They have a free dashboard, kind of like a Bloomberg for crypto. And they actually break down different crypto networks by their earnings. And they do a lot of work on it, because all these different applications and stuff, you know what I mean? They're all over the place. But what's interesting is, for the most part, what you're starting to see is that Ethereum is by far number one within the blockchain space in terms of its sustainable earnings. According to Token Terminal, over the last 30 days, Ethereum's generated $5.3 million in protocol earnings, which is actually massive.
Yeah.
But what's really interesting is that number 2 on the list and number 4 are Arbitrum and Optimism, which are layer 2s built on top of Ethereum.
Right.
So Ethereum is actually just dominating the space at this point. Right. It essentially accounts for 100% of all the earnings in the space. So Stellar right now, I see that has $3,000 of protocol earnings. It's number 3, which is very little, but it essentially accounts for 100% of all the positive earnings in the space. So, and then if you go down the list, you see Polygon, and there's other sort of layer 2s on the list. So I do think it does seem pretty clear to me that layer 2s are the way to go. Or just anything within the Ethereum ecosystem seems to be all of the most sustainable projects in the space, which is just really interesting to see.
Yeah, it is. Well, I mean, it's almost contradictory to the thesis of like the alt layer 1 thesis, right? Which is that, well, you know, there's going to be so much demand for block space and for state and for, you know, whatever transaction room. And so Ethereum is going to, you know, inevitably cede some market share to other platforms. Or maybe not. Maybe, you know, I've spoken to pretty knowledgeable people about this recently, actually, in the Ethereum community. They sort of view, you know, the Ethereum is like a layer cake of technology. It's like a technology stack. It's like the early internet protocols weren't particularly efficient, but they stacked on new capabilities. Like they kept adding it and bolting it on and making it better and, you know, improving and so forth. And like, you know, Ethereum started as this basically primitive network. But, you know, with the benefit of with the merge and the reduction of the energy footprint, and then the addition of this burn function. And now we've got layer 2s that are helping to scale it. And then these got ZK rollups, which are adding like not only scale, but also privacy and all these other factors to the network. It's like all of a sudden, like maybe there is only one canonical, you know, internet of value, in the same way that there was one sort of internet of information, which in fact was actually a network of networks and like that used a set of common protocols. So we'll see. I mean, Ethereum's definitely the leader. I think also in a period where you've got a bear market and there's less demand for block space, and where maybe, you know, more developers are going back to the drawing board to spend more time before launching applications, that you know, Ethereum becomes like a Bitcoin in the sense that it sort of just drives investors whenever there's a move higher, because it's viewed as a safe bet. But eventually we're going to see that dissipate into other kinds of plays as the market, you know, rallies back. I don't know. It's a really interesting situation that we find ourselves in. And I think for now, you know, Ethereum looks like, I mean, look, I don't know if this is an investing call or whether my compliance department will agree, but like, you know, Ethereum at $1,500, given everything that's happening, seems like pretty attractive at this point in time. We'll see if that gets to stay in the podcast, but it's like the totality of everything we've just described. And then you think like, okay, well, what's the value of that platform for the next generation of, you know, internet native applications that involve the movement and storage of assets and digital goods, which is a huge market in and of itself. Is it worth more than $150 billion? Like, probably, right? Long term.
Yeah.
So maybe
And
it's worth 10 times that for all we know. Can't be sure.
it's tough to know, really. But one thing that is clear, if you also look at the dApps side of it, so Token
Yeah.
Terminal splits them into blockchains, which definitely have different dynamics than just simple applications. And if you look at the applications, all of the top 10 applications are on Ethereum. And if you look at the top 20, so this is top 10 applications by earnings. So like things like DYDX, OpenSea, Lido Finance, Ethereum Name Service, Gains Network. Actually, Gains may not be on Ethereum. Actually, no, it's on our Arbitrum, so effectively on Ethereum. MakerDAO, all these different projects are all on Ethereum.
Yeah.
So to me, it's just very clear that if you think in the future there's going to be a smart contract blockchain that's worth, I don't know, billions or tens of billions of dollars, the safest bet by far is Ethereum. It has the network effects, clearly. It's got the earnings and earnings quality, and it's also just got like the brand and the trust and all that type of stuff. So, I mean, as you can tell, we're obviously huge Ethereum bulls, but it is interesting to see just how farther ahead it is. Yeah, I think it'll be interesting to see if both kind of the alternative layer ones are able to put a dent in that, but also also the application blockchains that we constantly talk about. Because one thing that is interesting is the number one dApp by protocol revenue is actually DYDX, which is building its own Cosmos app chain. And so potentially Cosmos may be able to, I guess, may end up being the one that takes a run at Ethereum purely because it just poaches the top applications and they effectively become Cosmos chains, which is like a very roundabout way of sort of competing with Ethereum versus what the alternative layer ones like Solana and Avalanche are trying to do, which is just competing head on. Cosmos in a way.
Yeah, I mean, Vitalik actually said in the Reddit chat board recently that he basically thinks that, Ethereum like layer ones are not likely to succeed. And he's generally been pretty like kind of indifferent or open-minded, I guess. And that was sort of interesting. But he said, there's going to be different ecosystems still, but it'll be Bitcoin, Ethereum, and Cosmos. It's actually what he said, which is kind of interesting. So I think it's time to have someone super senior and super serious in the Ethereum space on the show to talk to us about, how this is all working out. There's a common criticism of protocols and decentralized systems that they don't scale well, that they can't organize themselves, that upgrades take forever. And that's probably true. It's easier to get 3 people to agree on something than it is to get 1,000, right? And it's easier when one person alone can make the decision, even if it means the decision itself is lower quality. But Ethereum's proven itself to be able to get through these kinds of upgrades and to get to where it is today. Now, sometimes it's taken longer than expected, but here we are. So I think that'll be something we're trying to tee up for the next few weeks. But great discussion, Andrew, as always. Really interesting take on the market, on what's going on with these different protocols, and on this discussion around Ethereum to be continued. But for now, let's enjoy the rally, savor it, and we'll talk to everybody next week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.